What are you saying, people? Back with a bang. This is the Money Management. It's Financial Friday. So in today's video, we're going to be talking about how you invest in stocks. Now, the reason I'm doing this is because at the beginning of the week, the first 2 days, the stock market was up. The last 2 days, Wednesday and Thursday, the stock market has been down again. So right now, there are many stocks, many great companies, which are sitting at a very pretty price. So in this video, I'm just going to explain to you how you can start investing in stocks. Also, if you're already investing in stocks, maybe just how you can, switch up your methods, how you can start doing things which will actually work for you if they've not been working for you. Just different ways to help you guys get invested in the stock market. But before we do that, as always, I need you guys to make sure you guys are liking these videos, subscribing, commenting, sharing these videos with your friends, seeing who else you can help out in this world. We need more comments, we need more likes, we need to get these videos out to more people. So how do we start investing in stocks? Well, the first thing I tell you guys to do is read books about stocks or follow up on courses about stocks. So anything which you can just start learning. Just start learning. That could be, like I said, reading the books, how to start trading stocks, what kind of stocks you get, what kind of companies there are. Following up on a course because someone might show you, I trade with this platform, I use this to trade with stocks, I use these kind of indicators. All of these kind of things are useful to those who are beginning in the stock market. Once you've been in it for a year, 2 years, a few years like I have, you're going to start to remember, what you need to do before you invest in a stock, how to know if a stock is, at the right price or not, where you see opportunity, those kind of things. But you cannot do all those kind of things until you start just by reading books and going through people's content, learning through courses. I mean, you can also use YouTube videos, for example, but I definitely recommend reading a book. I definitely recommend just going through someone's course. Personally, the way I did it was reading books. I've seen, other courses around which I've heard a lot of good feedback on. I've never taken a course on stocks. But anyway, go out there, read books, follow up on courses, and start learning about the stock market. The next way I'll tell you guys to do is actually practice virtually trading before you invest real money in the stock market. A huge mistake, and a very common mistake that a lot of people make, is they start investing straight away. They start putting in real money straight away. Their hard-earned money, the money that they've earned, the money that they've worked hard for, they start putting that right away. And the thing is, if they're a beginner, it's likely to go bad. And if it goes bad, they get, unmotivated, they get unhappy, they get hurt by it, which is understandable. At the other end, there are people who, start succeeding. They think, oh, I'm so good at this, I'm doing great. And they think, they've got it. They put more and more money into it. They don't realize that maybe it was just a little bit of a lucky begin, and then they start to lose real money. Those people are too eager, too impatient to get into the stock market. You need to start practicing with virtual trade. When it comes to virtual trade, there are different platforms you can use. There are so many different ways you can just paper trade, practice simulation trading. You have stuff like TD Ameritrade, Thinkorswim. You have platforms like, Stock Track on your phone. Those are the kind of things you just need to use to get started just practicing trading. It's not always about making money right away. Same when it comes to, let's say, for example, when you want to run ads, you don't always just try and get money right away. You want to practice, see, what data you can pull. Same with stocks. You want to practice, see how stocks behave, how you react to stuff, your emotions. Those are the sort of things you need to practice before. So start by purely just paper trading or simulation trading. The next thing you need to do if you want to start getting invested in the stock market, you need to just, apply for an account. Of course, how are you going to trade without applying for an account? So what kind of accounts can you apply for? Well, to be honest, you have different platforms, many different platforms where you can trade. A couple I recommend for those of you who want to, just start out, is definitely Robinhood or Webull. Those are two very simple platforms, but you can start trading, you can do what you want, no commission payments, you're sorted there. You get more advanced and you want to start, using platforms which, maybe have commissions, but you can also, do a lot more with. Definitely check out E-Trade, definitely check out TD Ameritrade. There are a few other platforms I'd also tell you to look at, Charles Schwab, for example, but those 4 or 5 there are definitely enough for you to get started with. Now, a lot of people, when they start investing in the stock market, they just pick up something like Robinhood. They throw a few hundreds in there, start trying to make money, and they don't see huge gains right away. Sometimes you need to realize that it's your percentage gain that matters, not your actual dollar value. So make sure that, when you start investing in those accounts, you're focusing on the percentage gain. Now, the next thing I tell you to do if you want to start investing in the stock market, you've made your account, you've practiced trading, you've done your research. Now, before you purchase stocks, you need to do fundamental analysis on whatever stocks you're interested in purchasing. Why is this? Well, because, stocks have lots of history. Stocks have patterns. Patterns repeat themselves. You need to understand what patterns do what. What, it means if a stock is going up one day, down the next day. Going up one day, down the next day. Those are the sort of things you need to look out for. Fundamental analysis is going to help you so much. You have different, indicators. You have Bollinger Bands. You have different kind of lines which will indicate, what's happened before, what's likely to happen again. You have resistance band. You have stuff like support levels, where a stock doesn't usually go lower than. You have resistance levels where a stock doesn't usually go higher than. Those can change. You can see, what happens, let's say, when a stock actually beats the resistance line? What happens when a stock actually breaks, the support line? Does it continue to go down? Does it usually recover? Those are the kind of things that you need to ask yourself. By asking yourself those questions, by doing a little bit of fundamental analysis, you're going to be able to figure out exactly what your stock is most likely to do. Now, of course, we never know exactly what a stock will do, but I'm telling you, fundamental analysis is a lot better than you going to listen to someone who says, hey, go and invest in this, buy this, Tesla's going to reach this month. I'm sorry, Tesla may reach $900 this month. Yes, but you need to check out, why would it reach $900? What has it done before? What are the patterns there? What can I see, so I understand what's likely to happen? You don't want to just start putting in your money, your hard-earned money, just anyhow. That is the quickest way to lose it, and trust me, that's not what we want to do when we want to invest in stocks. So you've done your fundamental analysis, you're ready to start purchasing stocks. Well, you need to set a limit order. Place a limit on how exactly you want to pay for your stock, how much exactly you want to pay, how much the most you're willing to pay for it. You have to fill in how many shares you're willing to buy and at what exact price. So, for example, let's say Tesla today, it hits 480. Let's say you want to buy, at 479. For example, you need to go and put in and set a limit order at $479 for 5 stocks, 5 shares, whatever it may be. You don't want to just go in there and purchase at market price, because what might happen is it might shoot up and your order gets filled at 485. It might shoot up and your order gets filled at 490. Let's say you're placing 5 orders. Maybe the next person is selling their 5 shares, and they've set it for $490. You wanted to get in at 478, 479, you get in now at 490 just because you didn't put a limit order in. Don't just go at market value, don't just go at market price. Set a limit order. Trust me, don't get eager, don't get too impatient. You need to set your limit orders. It will fill in exactly what shares you want to get and what price you want to get them at. That's the most important thing. The exact number that you want to get in at. You've done your research, you know what you're aiming for, you've done your analysis, and you just want to get in at that exact price. No other price will do. Just like when you buy something, let's say you buy a smartwatch from me. You're not gonna, say, all right, I'm gonna pay $2,000 if it's $2,000. No, you know that the cost is $90. You're gonna pay $90. It's the same with stocks. You know exactly what you want to pay for and how much you want to pay for it. You don't let anything else happen. So set a limit order. So you've set your limit order. You've purchased your stock. You're now investing in the stock market. Well, first of all, I want to congratulate you because you've started investing in the stock market. But now, what do? You need to find out exactly where you said you're going to sell. If you don't know where you're going to sell, you shouldn't have even purchased. If you don't know where you sell, you can still, alter it and find out where you're going to purchase. Don't just leave it to run. But you have to set exactly where you want to sell. So again, it's the same with buying. Let's say you purchase a stock for $10. It goes up by 50%. It's now $15. Was your aim to get 50% from that stock? If your aim was to get 30% and you missed out and you now got 50%, that's your time to sell. If you think, it's going to keep going up and up and up forever, and then you let your emotions carry you when it suddenly drops down, or it takes a dip, when it takes a hit, you're not going to succeed. You need to know when to sell. You've done your research, you learn about stocks, you've purchased your stock, you've practiced trading, you've set your orders, you've purchased your stock. Now what? Now you need to sell. At some point you've got to sell. If you're holding it for long term, that's fine. If you're a day trader, then you need to be constantly on it. If you're a swing trader, you need to be monitoring it day to day. But if you're holding it long term, you need to have exactly where you're going to sell. You need to know where you're going to sell. Because that way you're not checking it too often. That way you're not letting emotions catch you. You're not letting emotions play with you. You're not letting random things affect you. For example, myself, I purchased Facebook. This was over 2 years ago. Throughout this crisis, it's fluctuated, of course. But my goal is not to sell it, when it fluctuates. My goal is a certain price value. My goal is a certain percentage gain. When it gets to that percentage gain, whenever it may be in the future, then I'm ready to sell. When you hold stocks for long term, you're not, worried about what happens, this week in the stock market, next week in the stock market. You know exactly what you went in for, the plan you went in with, and you know if it's good company or not. So if you purchased the right stocks, if you did your analysis, you should be fine. But apart from that, well done. You're now invested in the stock market. So I hope you guys enjoyed this video today. I hope you guys go out and make some money today. Added to that, make sure you guys leave a like, give me some feedback as always. Let me know what else you guys want to see on this channel. Most importantly, make sure you guys are back here tomorrow for the weekend, because that's where the real winners are made. Thanks a lot for watching, guys. I've been the Money Management. I've got money making. You've got money making. See you guys tomorrow for another video. Peace.